All right. Good evening, everyone. Welcome to tonight's webinar. Now, before we start, let me just go through a quick poll so I can see if you can hear me and you can see my screen. All right. If you can see me, just vote yes. If you can't see me, then you can, vote no. But uh, yeah, I think most of you can see me, so that's great. So I think I'll just end the poll right now and I'll get straight into the content. All right, so good evening, everyone. Welcome to tonight's webinar. I'm your host and your MC for tonight. My name is Brian, and I'm a dealer here at Flip Capital. Now, before we start, let me just bring you through a quick introduction to Flip Capital, as well as the products and services that we provide. Just a quick 10 minutes, so I won't take too much of your time, yeah? All right, so this is just a disclaimer that the presentation has not been reviewed by the SC of Malaysia and is only for general educational purposes only. It is not to buy or sell any investment products. If you want to dabble your hands into investing or trading, always keep in mind that it is high risk, so you should always consult a licensed financial advisor. All right. Hence PCSB, as well as its speakers, we are not liable for any investment decisions that you may make based on the content of the presentation. All right, so just a bit about Phillip Capital is that we were incorporated on the 7th of October, 1995, which means we've been in the business for around 30 years now, quite a track record. We are a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. And formerly you may have known us at Phillip Futures because that's when we only offered futures and CFDs. But just recently, for the past 2 years, we have started to offer stocks as well. Hence, we decided to rebrand ourselves. We are a trading participant of Bursa Malaysia Derivatives, as well as a participating org of Bursa Malaysia Securities, but we are also a holder of the Capital Market Services License, which means we are legally allowed to offer you these products and these services. So we have around 11 Phillip Investor Centers or offices across Malaysia, separated all the way from West Malaysia and East Malaysia, where we have our headquarters located in Kuala Lumpur. So we have offices all across the country. In West Malaysia, we have offices in like Penang, JB, Kota Damansara, and here in East Malaysia, we have offices in Kuching, Cebu, and KK. So if you are in Kuching or if you are ever near our office, or you could just decide to drop by, we have dealers there to assist your inquiries every Monday to Friday, 9 a.m. to 6 p.m. So here we have the page for the awards winning Bursa Excellence Awards, right? You can see that we've won many awards throughout the years. And as of recent, in 2023, we have actually won awards in the Best Overall Derivatives Trading Participant, as well as the Best uh, Best Retail Derivatives Trading Participant categories. So this kind of showcases to you that the quality of service that we offer to our clients has allowed us to get to where we currently are. And we also thank our clients for sticking with us through thick and thin, right? And we are sure that we continue to, to deliver top-notch support and services to you. All right. Thank you all. So next up, we have a wide global network where we are situated in around 15 different countries throughout the globe, right? So we have offices in Western countries like the UK, the US, all the way to Asian countries like Malaysia, obviously, but also Japan, Hong Kong, Singapore. And essentially, what this wide global network allows us to do is that it actually allows us to have a wide global coverage. And what I mean by that is we have access to exchanges throughout the globe. For example, in the US, we have the CME Group, CBOT, COMEX, right? In Europe, we have Eurex and the X Exchange. And of course, here in Malaysia, we have Bursa and SGX from Singapore. So if you have any products that you wish to trade from these exchanges that we also offer, you can do so through us, right? We are the middleman. We are the broker. You can trade any of the products listed on these exchanges through Philip Capital. So with that in mind, I want to try to tell you how we think we are your one-stop solution for your trading. Well, first off, we offer a wide array of products, right? All the way from index futures, agricultural futures, metal futures, to uh, old school equities and stocks, right? Like local Malaysian shares, foreign US shares, Hong Kong shares, and also last but not least, contracts for difference. We offer local Bursa share CFDs as well as foreign US and commodities CFDs. Okay, so with that in mind, we are your broker of choice, right? Not only have we won multiple awards in the past, we also offer 24-hour broking and execution support alongside top-notch advisory services in the form of latest market news trends updates, as well as assistance with our completely free online account opening process. So if you are interested in actually contacting our dealers, you can actually learn with Philip Capital, and we offer you free one-to-one coaching sessions, free seminars and webinars just like this one, as well as assistance on the free account opening process, right? So for the free one-to-one coaching session, it's mainly tailored for beginners, right? We separate them into two main sessions. The first session is mainly on product knowledge, where we bring you through an introduction to futures or CFDs or stocks trading. And the second session is mainly for platform coaching, where we bring you through our charting system for our in-house products to make sure you are prepared for the world of trading. Okay. So if you are interested in registering for our upcoming seminars and webinars, you can scan this QR code right here. They are completely free of charge, whether or not you are a client with us or you are just someone that's interested in getting started in trading. This list right here is for you. You can take a screenshot right here. You can scan it now, or if you miss both of them, that's fine. You can also find the information on our website at philip.com.my. All right. I'll stay here for just a bit longer so I can screenshot it and I will move on. All right, so next up, we also have our free weekly market calls where on the left, you have our market views and updates by our analysts every Monday at 11 a.m. And on the right, you have our live counter technical analysis sessions every Monday, 8 p.m. by Zane All, which is actually also before the New York session opens. So it's a great time to discover the weekly trends and potential entries and exits, right? Both of them, once again, free of charge. Client or not, you can join them for free. You can screenshot this page right here, scan it right here, or once again, is also on our website, flip.com.my. All right, moving on. If you are interested in any of the products that I've mentioned or you're interested in our services, you can actually scan this QR code right here. It will bring you to our online account opening portal where you can open a stocks account, futures account, or CFD account all in one platform. Okay, it's online, completely free, and also hassle free. You can do it at your own convenience and your own time. All right, let me bring you through our trading platforms. First off, we have Flip Nova, which is the platform that our clients use to trade futures. It is multi-device, which means it's on laptop, desktop as well. It's also on tablets and mobile, on the Apple App Store, as well as the Google Play Store. And if you're interested in knowing how it looks like, you can actually scan for a demo account right here with this QR code. You can scan it and it will bring you to the page where you can create a free account, right? It's also, once again, on our website. So if you do miss this, completely fine. You can find it right there. All right. Next, I'm actually proud to tell all of you that we are the only broker in Malaysia at the moment that offers TradingView linkage, right? Meaning you can actually trade through TradingView if you have an account with us. And for those that don't know what TradingView is, it's pretty much the world's most popular social trading platform, right? But if you don't want to trade through TradingView, that's fine. You can also use our in-house FlipNova platform because we actually took the UI and interface of the charts from TradingView and we slapped it onto our in-house platform for futures, which is FlipNova, right? So definitely check us out. We have a demo account for you to try out for free. All right, next up, we have our stock trading platform, which is Poems Global MY 2.0, where once again, multi-device support, laptop, desktop, mobile, you name it, Apple App Store, Google Play Store, and you can also trade foreign markets as well as local markets all in one platform. So if that interests you, definitely check it out on our website, flip.com.my. All right, last but not least, we have Flip CFD Trader, which is the platform that our clients use to trade CFDs. All right, we will go through the promotional section real quick because everyone loves promotions, right? Things are cheap, things are great, everyone's happy. So first off, we have a really great promotion for stocks, which is the trade US stocks at as low as 0.02% or 1.99 USD, running from now until the 31st of March, right? So this is one of the lowest rates that you will ever find for US stocks in Malaysia, right? You also have other great features like no platform fees, free US live market data, as well as weekly market calls to help you get started on your trading. So definitely take advantage of this promotion while it's ongoing. You can scan this QR code right here for more information. All right, once again, information is also on our website, flip.com.my. All right, next we have trade CFDs at as low as $2 running. Actually, it just ended, unfortunately. It ended yesterday. So this is one of the promotions that we ran for CFDs, but don't worry, we also have more promotions coming up for our products next year. So stay tuned for that. Aha, got you there. Okay, so before I get to the core content, let me just bring you through a sneak peek of what you can get being a client for Flip Capital. You can get access to this ebook right here, and also you get access to this WhatsApp dusting channel right here. But I'll go through that a bit more in detail at the end of the webinar. All right. So finally, we've gotten to this part. We've finished the introduction. Let me introduce you to our speaker for tonight, Mr. Dixon Teo. So Dixon is the founder and CEO of X Capital Group, a fintech company dedicated to developing cutting-edge trading systems, algorithmic trading bots, and quantitative trading models. Before founding X Capital Group, Dixon established himself as a pioneer in the retail trading scene as a full-time proprietary trader since 2017, focusing on fintech innovations, trading systems, uh, algorithmic trading, and quantitative trading models. Dixon generated consistent returns and captured the spotlight that ultimately led him to be the first Malaysian to be interviewed by FTMO, a top modern proprietary trading firm. Apart from X Capital, under his own trading brand, Dixon continues to drive innovation in the fintech and trading sectors, aiming to empower traders with advanced tools and strategies while fostering a community of skilled and informed traders via his one-on-one mentorship programs. Okay, I won't take too much of your time. I'll pass it straight on to our speaker for tonight, Mr. Dixon Teo. All right, you can share your screen now, Dixon, when you're comfortable.
Hello, good evening, everyone. Can everyone hear me clearly?
Yeah, we can hear you good.
All right, thank you, Brian, for the very elaborate introduction. I'm very honored to be invited to give today's presentation around this evening's topic, the retail trader's edge, right? And how us retail traders can adopt a probabilistic thinking and mindset for consistent profitability. Okay, so I think I'll just get right into it. So I think Brian did a very amazing introduction for me already. So I think I'll just skip that and straight to the disclaimer. Is that okay? Okay. So this document is not an offer or recommendation to buy or sell any investment product. It does not consider specific financial goals, situation, or needs. So before making any investment decisions, we strongly encourage you to consult with a financial advisor. If you decide not to seek advice, carefully consider whether the product or strategy is suitable for you. Investment come with significant risk, including the possibility of losing your initial investment. Okay? And we do not guarantee the accuracy, completeness, or suitability of the information in this document for any purpose. It is solely for educational purpose only. So if everyone's ready, let's get straight to it. Okay. So today we'll be answering three main questions. Yeah. So what are the three questions that we'll be answering? Why, what, and how? Okay. Why trading? What's your edge as a retail trader? And how do we execute a strategy with an edge, right? How do we build and execute a strategy with an actual edge? So the first question of the evening, why trading? I'm sure everyone in this room started trading differently, but I believe most of us have similar expectation when we started this journey, right? So why are we trading? Why are we pursuing this path? Okay. I'm not sure and I cannot answer for every single one in this webinar today, but here's why I started trading. So first things first, the freedom and the flexibility it provides, right? I fell in love with the idea of being free, right? Being my own boss. Huh? I'm sure everyone have the same sort of similar kind of expectation as well. And secondly, accessibility, right? Who doesn't love the idea of having just an internet connection, a laptop, and we could just generate income anywhere in the world? Okay. And third, adaptable to my life goals. I could straight away just picture how I want to live my life while doing the things I love, right? And the fourth, wealth generation. You see, this is what gets me excited for the most, right? Creating wealth for myself and my family. Okay. And last but not least, unlimited potential. There's no limit on what I could make in a day, a month, or even a year. So I could actually decide how much I want to make. Okay, so these are the reasons why I started trading. So, sorry. But in reality, I was faced with over trading. Okay, I started with dreams, with high hopes, probably becoming financially free in the shortest time I could imagine. But I was faced with this harsh reality, right? I overtraded. I'm having sleepless nights because I was trying to figure out these things as fast as possible. So the sweat and tears behind my monitor and thinking why I can't be as successful as the other traders that I saw on the internet, right? So I was constantly in search of a holy grail, thinking I could find the next best strategy or the next best system whereby I could just sit back, and make money even without working. So, and eventually what happened to me was negative P&L flickering in front of my screen, right? So I guess this is the journey where a lot of traders face. And that's when I thought to myself, right? How do I go from this sad trader sitting in front of the screen to the trader I dreamt of becoming from the very beginning of the trading journey, right? I mean, I started trading for the life that I envisioned, but how come I was faced with this sad, depressed, I don't even have any motivation to do anything else. I'm just an obsessed trader, right? Staring into the abyss, staring into the chart. So let me ask you this question, right? How do we go from the left, the sad trader, the obsessed trader, to the right, the chill trader sitting, in front of the beach, I don't think we can have a very definitive answer for this, as every trader's journeys are different. But here's what got me through this stage. Okay, by truly understanding my edge in the market and maintain a composed mental and physical state. Okay, having the confidence to actually execute my strategy day in and day out. So in trading, discipline is one of the thing. It's a cliche sort of, but it's the most important factor, right? It's one of the key for us to be for us to gain success in the market, right? But we do not even if we do not even understand our own edge in the market, what are we applying the discipline on, right? So should we be disciplined on consistency losing? I guess not, right? I guess not. So we gotta answer the second question. What is our edge as a retail trader, right? How can we compete in a place full of uncertainty? Yeah. In the market, it's full of uncertainty. Everything is uncertain. We do not have a certain answer on whether if gold is gonna go higher. We're gonna long gold, and it's going the price is going to get higher. We do not know that, right? But there's one thing for certain. I'll tell you that if we go in blindfolded into the battlefield, this is the one thing that's certain. We are destined to lose. We are destined to lose. So let me just explain, right? Before we even understand what edge we have over the market, I think we need to understand and to know who are the players in this industry. Okay, so you see, we are up against institutions, algorithms, as well as peer retail traders, to name a few. So we need to understand the players in order to know how we should position ourselves for success. So let's look at this comparison table. Okay, now we could get an idea how hard it is if we go on the battlefield unprepared. So as retail traders, we do not have much edge compared to the institutions and the algorithms, right? So from what we could see here, there's only a couple of things that we have a slight edge at, which is a flexibility, and we have low market influence. Okay, so we can actually be very nimble and flexible due to the capital size as well as the decision market structure, right? The decision making structure. So for institutions to make a decision, they need to pass through the risk manager, they need to pass through the investment committee. So it's a lot more process in order for them to just make a single decision. But as retail traders, we have the absolute freedom to trade. We have the absolute freedom to execute, right? But we got to remember this. This is also a double-edged sword. It could be good and it could also be bad. And due to the nature of the capital size, we have a lot less influence, which means we could avoid slippage a lot more compared to the institutions. Okay. So now we have an understanding on what's our advantage as retail traders, right? So what sort of mindset or model should we apply to realize this for the fullest potential? Okay. So here's a thesis based on the gambler's edge from the Utah State University. The main principle drawn from this study is the casino model. Okay. From the ways the casinos operate, they focus on small, very tiny statistical advantages, right? Consistency and the long-term realization of expected value. So in short, I'll call it EV. Okay. So now EV is crucial. If we are executing a strategy with a negative expected value or expectancy value, what do you think it will happen, right? Of course, we're going to be getting a lot of losers because the strategy itself has a negative expected value. So as retail traders, we should operate like a business, or in terms like a casino, right? Let me elaborate more on the key principles. Okay. The first principle, the edge matters. So we could see how casinos operate on just a small tight edge, but they could be very profitable over the long run, right? The house edge for them are rather small, but how could they be profitable? It's actually very simple, okay? Positive expectancy value, okay? Now, this direct translate into having a strategy with a positive EV. So here's a simple formula on how we could calculate EV, okay? So if you look at this, EV equals to win percentage times the reward minus the loss percentage times the risk. So if we apply this in trading, right, a trader with a 40% win rate and a 3-to-1 risk to reward ratio actually has a positive EV and can expect long-term profitability despite losing more trades than they win. Okay? So although a trader only have a 40% win rate, with a 3-to-1 risk to reward, they could expect long-term profitability. So what does this mean is that the losers doesn't really matter if you have a long-term positive expectancy value. So the key principles number 2, the second principle, the volume realizes the edge. Okay, so how casinos operate, they rely on the law of large numbers. So do you think the casinos care if they lose one hand or two hands? I would absolutely doubt that. Okay, over 1,000 of bets, their statistical edge ensures the predictable profitability. Okay, so with more bets, their statistical advantage will show. It will not show in just a couple of bets. So these key principles actually helps us to understand that any single trade is always subjected to randomness. Okay, we have zero control over the outcome of our trades, and only through volume, only with volume, the positive EV will show. Okay, so what do you guys think? Is it easy to execute a strategy when you have 5 losing streaks in a row? I know it is tough, but this is just the facts, right? Only with more volume, the statistical advantage will show. But first things first, the strategy must have a positive expected value. Okay. So this is the third principle I derived from that thesis, okay? Removing emotion. And this, I would say, is the hardest for a retail trader to follow, but it is also the most critical amongst all the principles. Okay? You see, casinos, they operate emotionless. They do not change their rules or increase the bets based on any individual outcomes. Yeah. So as retail traders, if you got yourself into a tilt mode, all the other principles will be thrown out out the window in a millisecond. Okay, there will be no rules, no strategy, right? Just because you got yourself into a tilt mode, you get carried away by your emotion. So only by sticking to our trading strategy, plan, and rules, the predefined strategy, we then have a chance to realize the long-term positive EV. I cannot stress this much, so let this sink in for a little bit. Emotional decisions destroy your consistency. Emotional decisions destroy your consistency. So Now, would it be easy to remove emotion? Absolutely not, because we are humans and we have emotions. We are not robots. We are not AI, right? So we have emotions. But if we could design a proper system to assist us, then we might have a chance. Okay, which comes to principle number 4, risk management. So have you ever wondered why casinos cap their bet sizes in different tables? Okay, this system is there to avoid them having catastrophic losses. Okay, so if they do not have a consistent bet limits, how do you think they could control their 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 losses, right? Their probability. They have no ways to control that, right? So even for us as traders, if we do not have a consistent position sizing limits, how do you think we could control our emotion? So imagine this: if you are trading one counter, let's say if we're trading gold futures contract with a full risk per trade, can you remove your emotion entirely? And if you're trading with an exposure of a 0.1% of your total capital compared to a 5% position size of your total capital, how would you feel? Do you think you will feel the same with 5% compared to a 0.1%, right? We got to understand this. You see, even from the previous slides mentioning the place in the markets and everything, but one of the most important one is actually us. We are our own enemy in the financial market, because if we let our emotions get over us, everything gets thrown out the window. So we need to have a very rigid risk management system in place to support us and to guide us, right? Because we cannot remove the emotional factor, right? So in order for us to remove emotion, if we have a proper system, meaning to say, number one, we decrease the impact of a single trade, right? So we can decrease the size for us to have a long term, a chance to really realize the long term effect of a positive expectancy value. Now comes to the last key principles on this casino model. Okay, so casino, they focus on long term results. Their main business are relying on overall profitability instead of individual winners or losers. Okay, they do not care. They do not care. They only focus on more than their overall profitability, right, across thousands and thousands of bets. So as traders, we must also adopt a similar mindset. There's tons of traders get discouraged by their losers in most often cases, right? Because losers tend to affect traders' psychology more rather than their wins. Okay, so we must also assess our performance over months or years. Okay, I would say if we could assess our performance over the years, you could have a better understanding on where do you stand. Okay, so here's a very simple um, exercise, for example. Okay, let's say if we look at a coin flip expectancy, right? This coin flip example is actually the most simple, but yet the most powerful one for us to understand expected value. Okay, a key concept in trading is actually probability. So it could actually demonstrate how even a seemingly random game can become profitable if we have a positive statistical edge. So the game's rules is this. Okay, now I have a coin with me. Okay, so let's say this little dragon here, our head, right? And this one, this Chinese character is the tail. Okay, so let's say we flip the coin and we have 50% chance. Okay, but if we get head, we win $3, and if we get tail, we lose $1, right? So the probability of heads and tails are 50-50. Okay, what is the expected value? Okay, so with over 100 flips, what is the expectancy value? Okay, Brian, can they do like some sort of commenting or anything?
Yeah, if you guys want to comment, there will be a question chat box at the bottom of your phone. If you're using a mobile device to tune in, you can send a message through there, and we'll be able to see it.
So what with over 100 flips, what is the expectancy value? I guess no one's answering right now. Okay, it's okay. I'll go straight to the answer. Yeah. Okay. So the game rule is stating that there's 50-50 chance of getting heads or tail. Okay. So if you get a head, you gain $3, and if you get a tail, you get minus $1. Okay. So with over 100 flips, how much would you get? Okay. So the EV calculation is actually very simple. Okay. Expected value 0.5 is 50% times the $3 if you get head. Okay. Then you minus 50% times $1, which is equivalent to a $1 expectancy value. So there's a positive edge there, right? You have a $1 edge. So if over 100 flips, hypothetically, this strategy could actually win you $100. Okay, but of course, during the course of flipping, do you think uh, it is going to be one time head or one time tail? Of course not. Okay, but we must remember the law of large numbers. Okay, with more flips you do, the statistics will play out in the outcome. Okay, so comes to the third question: how do we build and execute our edge? Okay, so with all the information that we have just now, how do we translate into building and actually executing the edge in the market? Okay, so step number one, we gotta build a suitable strategy, right? There are tons, and I mean tons, of strategies that you could explore, but the most important factor of it all is whether if the strategy suits you, your lifestyle, and most importantly, your psychology. So here's a basic understanding on how we could build our strategy from ground up. Okay. So first, market selection. We got to understand which sort of market or industry we're looking into, right? Are we going to trade futures? Are we going to trade stocks? Okay, we got to have a basic understanding first. Okay, then we got to select the time frame that are suitable for us. Are we going to monitor a single time frame or a dual time frame? Are we going to monitor the daily time frame with the 1 hourly time frame? How are we going to monitor? Okay, so we got to predefine what we want to do first. Okay, and the third, market session. Okay, are we going to trade 24 hours? Can we stay awake 24 hours? I guess not, right? So we got to predefine which market session that we are going to be focused on. Okay, and then fourth, we got to form our entry and our exit criteria. Okay, the stop loss and take profits. When are you wrong? When are you right? Then the fifth one, position sizing, right? Remember what I mentioned about having a smaller size could actually help you in executing. So how are you going to fix your position size? Is it going to be a fixed size or a fixed percentage of your portfolio? Okay. Lastly, the execution method. Are we going to use more limit orders? Are we going to use market execution? We got to understand this first. Then comes to the strategy rules, right? The strategy rules are there to protect us, to ensure that we are on the right path to a positive outcome. Okay, so we must set it, we must predefine it, set it, and also follow through regardless of the situation. But we could also always be very creative. Okay, we could actually create more strategies with more diverse rules, right? So that we could actually have that single strategy's positive expectancy value actually played out in the long run. Okay. But let's say once we set out the rules for that particular strategy, I would recommend the best way is to just follow through. Okay. Because we will not be clear-minded when we are in market, especially when we have our hard-earned money at risk. So we need to have a set of rules to safeguard us. Okay. So how many trades per day are you going to take? Per week? Per month? Right? We could actually predefine this. Are we going to trade the news? Are we not going to trade the news? Is it a set and forget strategy? Are we going to monitor after we place the entry? Right? What is the outcome we desire? So all in all, we could actually design our edge and design the strategy that's suitable and also sort of having a preset outcome that we are looking forward to. Okay. So now here's an example on how we could actually build our very own strategy. So let's just call this strategy one. Okay, it's a simple strategy using RSI crossover for day trading. Okay, so remember, you will know what suits you best. So this is just an example to show how we could actually incorporate the knowledge shared today into the real world example. So market, we're going with gold futures. Okay, the time frame is a 15 minutes execution and a daily bias. So it's a dual time frame strategy. Okay, the session we'll be focusing on is the New York open range. So we are only going to look at the charts for 2 hours only, right? So if we predefine the session, it's actually very simple for us to actually execute it. Okay. So the entry criteria, if the RSI crossover and align with our bias, which is the daily bias, plus this candle strength, we are looking to enter. Simple. The take profit will be 1 to 3 risk to reward, and the position sizing will be fixed at 1% of our total portfolio capital. Okay. So how we're going to execute it? We're going to utilize market execution regardless of the price at the candle close. Okay. So max trade is 1 trade per day. We're going to avoid all major economic data release. It's a set and forget strategy. And also we have a max drawdown rule, which is if this strategy loses more than 10%, we are out with this strategy. We do not like this strategy anymore. Okay, is it clear, everyone? Okay, so now this is a strategy one that is planned and executed on GC, gold futures. It's focused on dual time frame, simple market execution, and this is just a successful example. Is it clear? I'm not sure whether my screen is okay. Brian, is it good?
Yeah, it looks good.
Is it too zoomed in?
No, it's fine. Looks
It's
all
fine.
right. Yep.
Okay, cool. All right. So here, this is the 15 minutes time frame. Let me just zoom out a little bit if you guys can see. This is a 15 minutes time frame. And we're looking at this RSI right here. Okay. So what you can see here is the market session. Basically, I use an indicator just to chart it out. So I know when am I, when should I be looking at the chart. Okay, so I'm looking at a very simple crossover strategy. When the RSI cross over down below the zero mark, this is the zero mark, okay, and closes above, which is bullish, okay, then I'll be looking to enter, and I'll also
Uh,
track whether, sorry, can you see?
yeah,
Oh,
sorry, I
sorry.
think you're a bit too zoomed in. We can't see the chart on top.
Okay, is it
Yeah,
okay
yeah,
now?
this is fine. Yep.
Okay, change the small marker. All right, so then what I will need to track is the candle momentum, the candle strength. Is the candle closing higher than previous highs? If yes, then I'll be looking to take an entry. But do not forget, this is a dual time frame strategy. So if it happens in the 15 minutes time frame, I will need to see and get confirmation from my dual time frame, which is the daily time frame, right? I will need to get confirmation. Okay. So how do I get confirmation from the daily time frame? It's actually simple. Okay. I could actually just say, okay, if the RSI is bullish, I'm looking for longs in the 15 minutes time frame. Plain simple. Okay. So I can have this open up. I see whether if it's bullish. If it's bullish, then I'll be only looking for long only. Okay, is it okay right now? Okay, right. So I'll go to the next example. So this is a losing example, right? The daily is in a bearish condition for the RSI. This is the predefined rules that I set for this strategy. The 15 minutes indeed have a crossover, okay? But then if the candle strength is not so good, if we enter, so what does it happen? It yields a loss, but it's okay, right? Because even if I don't think there's any strategy that's yielding 100% win rate, right? I'm afraid not. But do we care? No, we don't care. Okay. So what we care is just to see whether if this strategy, if we apply this strategy consistently, will we yield a positive outcome? Okay. We need to test out the strategy first before we even really deploy it out in the market. So this is just another good example. It's working out, okay? But this is actually not important, okay? The important one is whether if your risk to reward ratio is good, okay? And what's your win rate? What's the condition? We need to understand the strategy in and out before we even execute the strategy, okay? So that we have the confidence to actually follow through. Okay. So remember expectancy value, right? We need to test a strategy no matter how fancy or how simple it is, okay? A strategy can be plain simple. Like just now that case, it's actually a very simple strategy. It's nothing complicated, okay? But the true edge is actually the positive expectancy value. So if over 100 trades, what does this strategy, okay? So unfortunately, this strategy, the win rate is only 30%, okay? The risk to reward ratio is fixed at 3 risk to reward. And just now I mentioned the position sizing, the risk per trade is 1% of the total portfolio capital. So let's do some simple calculation, right? 30% times 3%, which is the reward, minus 70%, which is the losing rate, times 1% equals to a 0.2% expectancy value. Okay, so it's plain simple. The results 0.2% times 100 is 20%. So let's say if this strategy is you're going to trade this strategy 100 trades is across 1 year, right? The expectancy value hypothetically should be around 20%. Is that okay? So the question is this strategy providing a positive expectancy value? So if it yields a positive expectancy value, that is what I'm looking for. Okay, I'm looking for a positive EV. That's all. Is it the best strategy? No, we could have a lot more fancier strategy, right? But at the end of the day, this is what we're looking for. So, of course, in order for us to have a deeper understanding of our strategy, we got to run through back testing and forward testing. Okay, we cannot just blindly uh, follow the back testing results because live conditions are very different. And forward testing actually helps us understand the executability of the strategy. And if anything doesn't fit well, we must revisit and refine the strategy, and the cycle repeats. Okay? Because when we put it on in the live market, right, there's a lot of factors that when we backtest we cannot consider, right? Is this timing suitable for me? Am I having more calls coming in that affects my emotion, hence I cannot execute the trade? So there's a lot of other factors, right? So in order for us to have a very sound strategy, I would say we got to go through a back testing and a forward testing phase, and it's a cycle. Okay. And here's a few important statistics we need to track as well. Okay, in the back testing period, and of course the forward testing period. Okay. Of course, this is not all of the metrics that are there, but these are those that I think would actually present us a very thorough understanding of our strategy. And in my opinion, we'll need to understand and include all of these metrics so we could actually execute and track our strategy's performance with confidence, especially during the live trading time. Okay. So with enough data comes confidence. Okay. And with confidence, retail traders can remain calm and have a very composed mental state. Okay. So here's a couple of strategies that I think is crucial for us, very important. The winning rate, the losing rate, the break-even rate. Okay, are we going to have a break-even rule? What is the maximum drawdown of this strategy? How many winning streaks per row? How many losing streaks per row? So if we do not understand how many winning streaks per row and losing streaks per row, we could easily get discouraged, right? So let's say if we're executing just now the strategy is about like 30% winning rate, right? So let's say if you trade and you have a 7, let's say just plain and simple, you have 7 losing streaks in a row. Are you going to execute the next trade? Where do you get that confidence, right? You might be thinking, oh man, maybe this strategy is not just not working. Okay, so we got to track this data, right? How many losing streaks in a row historically this strategy provides? Okay, and the numbers of trades per day, per week, and per month. What is the profit factor? And what is the average RR this strategy yields? Okay, these are very important. So if you guys want to screenshot it, you can do so. Okay, I'll head to the next one. So step 4, we deploy it with minimal risk. And at this point, you still do not have enough data to scale up your size. So I would recommend to keep it small, because trading is a never ending learning process and the markets are ever changing and unforgiving. So we must deploy, monitor, and rinse and repeat the entire process until we have enough data to prove that this strategy actually have a positive expectancy value. Okay. So it comes to the conclusion. Okay, it's quite fast. So what is the conclusion for tonight's presentation, right? I hope you all will have a basic understanding, and I actually provide some value to you all today. So the conclusion is this: the retail trader's edge is consists of these four key points. Okay, positive expectancy value, continued refinement, and flawless execution. Okay, and we need to manage the whole thing, manage the risk, manage ourselves, and repeat the whole process. Okay, so remember the whole cycle repeats. So we must first understand whether if a strategy have a real edge, and we need to find that edge. Okay, so after finding that edge, we need to execute the edge and manage the edge. Okay, we need to maintain the edge. So the whole cycle repeats. So um, this is the conclusion for me, and I hope you guys enjoyed this presentation. Yep. Thank you guys. Brian, back to
Oh,
you.
all right. Thank you, Dixon, for the presentation. Let me just pass my screen over real quick.
Right.
All right. So we've come to the Q&A section for the webinar. So if you have any other questions you would like to ask Dixon before we let him go back since it's Friday night, but we are here talking about trading and investing. There is a question tab icon. If you're on mobile, it's on the upper right corner of your mobile device. So you could click on that and you can ask any questions regarding trading or investing for Dixon before we let him go back and enjoy his Friday night. All right. So we do have a question here. It's, do mechanical models help you manage your emotions? And if so, why?
Do mechanical models help you manage your emotions? And if so, why? Definitely, it helps. Okay, having mechanical models definitely helps your emotion because you're actually managing the model, right? Instead of managing yourself, so you could actually have a very different perspective rather to say because okay, as individuals, the only thing we could see is outside. Okay, it's hard to reflect inside. Okay, so having a mechanical model and a predefined systems can definitely help with your emotions. But of course, remember the size matters. Okay, so let's say if you have a good mechanical system, a good mechanical model, but you're deploying it with huge risk, I think you will also intercept it if you're not comfortable with that risk. Yep.
Okay, thanks, Dixon. I have another one here, which is, what is the time spent for me to be able to become profitable?
What is the time spent for me to become profitable? Okay, so this question is a very, I don't think there's a very definitive answer. Okay, but it depends on um, how much do you actually want to be. How do I put it? How much do you actually want this, right? So time spent, I think it depends on if you're going in the right path, right? But let's say today, if you understand that, okay, you're only in search of positive expected value, you need to manage your risk, and you're not in search of a holy grail system outside. Okay, because today I'm not actually saying that okay, the strategy that I'm giving you is a holy grail system. Okay, so basically you can cut out the noise, right? Okay, so if there's no holy grail system outside, what can you develop? What sort of strategy can you think of that's very different compared to what most people do? Because in trading, at the end of the day, it's a zero sum game. So let's say if everyone is doing the same thing, uh, good luck to you. Okay. Um, so the time spent, it depends on how much do you really want it, and Um, and it depends on whether if you find a good edge and if you're able to execute it, then I think it could be fast, could be slow. But I don't have a very definitive answer for that.
All right, yeah, it depends on the trader and essentially their habits going to trading because you are not just a good trader if you have I mean, you can't be a good trader if you can't have great habits outside of trading. So definitely look to build yourself, not just in trading, but also outside of trading. All right,
Yeah, and definitely
thanks.
if profitable, it depends, right? If you win $10, it's also profitable, right? So
Yeah,
it's hard to say.
yeah, money is money. All right, I have a next question, which is this one probably hits hard for a lot of people. Um, but it's may I know what was your lowest point in your trader's journey? How did you pull yourself up? I've had a streak of losses recently that has got me questioning everything.
Okay. So what was my lowest point in this trader's journey, correct?
Yeah, correct. And also, how did you pull yourself up from it? Because this trader states that he has encountered a losses or a streak of losses recently.
Okay. Streaks of losses. Okay. So the lowest point in my trader's journey is definitely, I think, is quite similar, right? But I think I had, I don't know, losing streaks of monthly losing streaks. It's not just trades, okay? It's like every single trade that I put in is a loss. So I jump from a 4 hourly time frame trader, then I jump to 1 hourly, I jump to 15 minutes, and I jump to 1 minute. I jump back to 1 hourly. So it's like a full year of just losing and losing and losing and losing, right? So that's actually one of my lowest point. Like I said, I was obsessed. Um, every single day, I'm just trying to look for a holy grail system, right? Just looking over the internet. So if I see anything that's good or other trader or guru that promised me some sort of good strategy, I jump straight into it without even testing it, without even understanding what is the outcome. Okay, so let's say if it's a very fancy strategy, right? Then I'll just jump straight to it. So during that time, there is no consistency whatsoever. There's no data that I could gather as well, right? Because if I'm just jumping around, how do I know whether if that strategy is profitable after the losing streak, right? So I think to understand your strategy and to really understand it, it's actually a key for you to be confident. Okay, so if you do not test your strategy, if you do not know what is the EV of your strategy, then how could you possibly pull yourself out? Okay, so how I pull myself out is definitely is pure grit. It's pure grit because of the why. Because I love the game. I love to trade, and I just love the whole idea of this. That's why I keep continue, right? And how do I actually pull myself out is by understanding this core concept, which is positive expectancy value. I mean, it's simple, right? Because previously you are looking around finding a good strategy, but at the end of the day, you just need to test out one strategy at a time. Okay, you just got to record it down. You just got to build a system, right, for your entire trading strategy arsenal. Okay, you could actually build 10, 20 systems, correct? But of course, putting in the work, actually documenting every single thing, it could actually uh, helps. It actually helps a lot, especially during the dark times, right? Losing streaks are tough, that's for sure. I've been through that. Sometimes I'm also on it. So, but when you understand what is the positive expectancy and you did your homework, I think you should just let go of yourself and just be comfortable. But of course, choosing the right size matters.
Yeah, all right. Yeah, just looking at it as as essentially like a business cost, right? It's essential for the business to grow, but you still have to manage your risk to keep it as low as possible without, blowing everything. That's a great one. All right, I have one more, which is regarding the back testing and the forward testing that you just mentioned. Could you please explain how does the forward testing work? Is it like a live testing?
Okay. So there's a lot of different terms in forward testing because let's say if you're talking about algorithmic trading, forward testing is very different. Okay. So just now I'm actually giving a very simple terms. By forward testing means just demo testing it in live conditions. Okay. So basically, let's say if you have a demo account, you could just execute it, or you just could paper trade it, right? So when you paper trade, although there's no emotion there, but you could actually see what happens in live conditions for your strategy, so you could understand it more. By backtesting, let's say if we're utilizing trading view, basically you're just replaying the bar. You're not gonna you're not gonna see, okay, and you don't have the waiting time, and that's very important. Okay, so let's say if we are testing on a daily time frame, okay, you do not actually need to wait for a day to make a decision, correct? So let's say if you do not forward test, you will not understand the real waiting duration. So you could easily be how to say you could easily get manipulated by yourself that you're actually rushing into trades because you're just plain waiting. So I think forward testing, you could define it as demo trading.
All right. Thanks, Dixon. I will give you a last question before I let you go. I know it's been a long session. I'm sure it's been long for everyone, but how much capital do I need to start trading in order to generate enough income to support myself full time?
To support yourself full time. I think this is actually also a very open-ended question because it depends on how much you need for month-to-month basis, right? So let's say if you have a comfortable job right now, right? Definitely, you need to do it part-time first because I don't think it's good for you just go full-time right on, correct? So it depends on your strategy as well. So I think in order for you to have enough capital to start trading, uh, in order for you to generate enough income, it really depends on what is your desired outcome. Okay, what is the desired outcome? So if you are designing a strategy or you are expecting a strategy to provide you a 20% return per year, okay, then you need to calculate, just reverse engineer it, right? 20%, how much is it going to give you? Let's say if you're trading on a $100 account, okay? So you need to be realistic, right? Let's say if you have 100,000, maybe it's a different case, okay? 100,000, let's say, well, let's say we're talking about ringgit, right? 100,000 ringgit, right? 20% is 20k. 20k you divide it by 12 months, then you get your roughly the income there, okay? But if you're solely depending on the profits from trading, I think you'll be in a very tough spot because I did that as well. It's tough because once you have a losing streak, then everything just is gone. Okay, so I think it's best to keep ourselves comfortable, but not too comfortable. We still got to work on, but it's mostly on the strategy, I would say. Yeah, so I think I cannot give a definitive answer, but definitely you just do the reverse engineering. I think you get the answer out for yourself.
All right. Thanks, Dixon. Last question. I promise you, last question. Okay. Should we trade on our own or should we join a trading firm? I assume trading firm maybe means a proprietary trading firm or a trading
Correct.
desk. Yeah. So, yeah, that's
Why
the
not do
question.
both? I think you could actually do both. It depends on what sort of trading firm are you referring to, right? Are you talking about like actually joining a trading firm, paying them a desk fee, you know? So it depends. A trading firm actually provides a lot of value as well, but of course, it depends on what you want. Okay, if you're comfortable with the job or the career that you have now, do you want to quit it? I'm not. I don't know, but this is a very subjective question, so
Uh,
I don't really have an answer to that.
yeah, he replied with it's a prop shop. I'm not sure what a prop shop is.
Okay, a prop shop is just a prop trading firm. Yeah, a prop trading firm. So I mean, there's a lot of prop traders that I know they're doing their own personal accounts as well as a prop shop account. So I think you could actually do both. You do not have to limit yourself, right? Let's say if you're saying just I can only trade my own account, right? Why not? You have other people's capital to leverage.
Yep, that's a great answer. Okay, there's no more questions from the floor, so I'll just do the closing. Thank you, Dixon, for your time, and I'll catch you at the end of the webinar. So first off, I want to just go through the previous things that I mentioned. If you do sign up to be a client with Flip Capital Coaching, you actually gain access to a 250 plus page ebook, which is exclusive to our clients only, where you can learn a fully complete technical analysis strategy from A to Z. This is something that I've created from other sources. I'm not the author of these concepts, of course, but they are ones that I've studied for a very long time, and I've actually just basically merged everything that I use into just one ebook, and this is completely free of charge. There's no extra charges, no hidden fees, and you do recall you actually can open a free account with us on your mobile device, your laptop, since we do have an online account opening portal, and you will immediately get access to this ebook after you have completed the account opening process. Okay, now that's the first freebie. The second one is you actually get access to a crude palm oil futures daily technical forecast group, which is once again also exclusive for coaching clients only, or at least clients who open an account with the coaching branch which I belong to. Okay, so in this group, you get free daily markups of technical analysis charts for crude palm oil futures for both the long-term perspective as well as the short-term perspective, mainly in form of areas of key support and resistance areas, right? You also get access to market breakdowns and compilations for fundamental analysis, mainly supply and demand data release for palm oil contracts, as well as a further in-depth explanation of strategies and trading schematics. Now, a disclaimer that this forecast group is not a signal group. It is only for just your general references. It's not for buy or sell calls, since you are not legally allowed to do that. So it's only for you to just add a bit of confluence to your own strategies to see if it makes sense. Okay, so you get access to both of these things if you sign up with us. There's no time limit on this, so anytime you feel comfortable with, you can reach out to me or my colleagues here at the coaching branch. Right, so if you're interested in any of the promotions, the freebies that I've said, the US stock promotions with a really low rate, or you just want to get started in your trading and you want kind of like a Kickstarter, like a tutorial to trading, you could open an account with us and you can reach out to me if you want to ask any questions. Okay, you can scan this QR code right here. It'll bring you straight to the portal. You can open stocks, futures, and CADs all in one platform. So definitely take these first steps to start your trading success with Philip Capital. All right. So if you're interested, and you want some time to think, you aren't sure if you want to dive into trading, you aren't sure if you want to commit so much, it's completely fine. I understand you. You can reach out to us here. Here we have our social media handles. We are on Facebook, YouTube, LinkedIn, as well as Telegram, as well as Instagram. We also have all the information that you see right here on our corporate website, philip.com.my. And we also have two other Telegram channels, right? One for Philip Capital Stocks, where you get updates and recaps of latest market movements, as well as news releases for companies in focus, as well as the Flip Capital Futures and CFD channel, where you get market views for major indices, commodities, as well as currencies, and latest updates on market fundamentals. All right, these two are, of course, once again, free of charge to join. So if you're interested, scan this QR code right here. And if you miss out on this, it's fine. It is also on our website, philip.com.my. Okay, so if you want to contact me or any of my colleagues here at the coaching branch, we have our address right here, open from 9 a.m. to 6 p.m. every Monday to Friday. Or if you prefer to drop us a call or email, you can also see our office phone number and our group email address attached here in this slide. Okay, so yep, I hope you guys have had a good time here. Dixon gave a really great, insightful presentation to help you kind of like figure out your footsteps when you're trading the markets, which can be something that's very tough. So once again, thank you, Dixon, for your time. And thank you all for joining. Friday night, I know, but you guys took the time to be here to improve yourselves. So big ups to all of you. I'll see you guys in the next one. Peace out. Bye bye.
Thank you.